I am excited to hang out with Michael Relvas today. I don't know anything about disability insurance, but he knows everything about disability insurance. So, give us just a little background on yourself and your firm, and then I got a whole bunch of questions we can rapid fire 'em today. Walk me through Michael Relvas and disability insurance and what you do to help physicians.
Of course. So, yeah, like you said, John, Michael Relvas, I'm a certified financial planner professional. I've been doing this for a little over 17 years now. We're approaching 20 years. My focus is exclusively on disability insurance and term life insurance. We work with physicians in the medical community. That's what we've been doing the entire time. So it's a market that I know really, really well. It's probably not a question that I haven't been asked before, at least a handful of times, which makes it really helpful when people are trying to learn, right? So that's kind of the motto of the business plan, was always to just be very educational, very helpful. I try to give people as much detail as you possibly can, let them sort of make their own informed decision rather than just kind of trying to push any specific product or any specific company or anything like that. A lot of transparency and education. It's not that difficult. It's just there's a lot of details when it comes to disability insurance. Term insurance is pretty simple, but disability can be very detail oriented. It's all simple. You just need to have somebody explain it to you clearly so that you can get it and you can
Yeah.
kind of make those informed decisions.
Well, yeah, and make sure you do it right. That's what one of the things I love about we started this company to help people, and we're an educational based firm, and we love doing this stuff. And that's one of the reasons I love hearing from you and hearing your perspective and working with you as the case may be from time to time. So I've got some rapid fire ones here. I'm going to say, okay, so we work with physicians all the time, and they have disability insurance as part of their benefits. They have medical insurance, dental insurance, vision insurance, maybe pet insurance. They've got life insurance. I saw one the other day, a whopping $35,000 for the life insurance plan that they had. And then they have disability insurance and a 401k and some CME dollars and some vacation time. So physicians have, a lot of them do, an employed model anyways, has disability insurance with their job. So they need additional or they don't. I don't understand.
That's a great question. So, well, there's a couple of answers to that. The number one thing is every group disability insurance plan is going to be a little bit different. So some of them are capped at a pretty low number. You might be surprised almost, right? Physician finishes up their fellowship or residency, starting a new job. Maybe they're making 200, 300, 400, whatever the number is. And you've got a group disability plan that says, hey, we cover 60% of your income, but it's to a
Up to a
maximum of
cap. Yeah.
6,000 a month. Exactly.
Yeah.
So, 6,000 a month isn't really covering 60% of someone who's making $30,000 a month. Obviously, it's a much lower amount. So in a situation like that, where the plans are really capped at low levels, yeah, that person needs a decent amount of supplemental coverage, right, to fill that gap, because 70% of their income is not actually covered. 80% of their income is not actually covered. And an individual policy is going to allow them to do that. Then there are some situations where a person truly does have 60% of their income covered. One downside is still that oftentimes employer sponsored plans are taxable. So, you say, okay, you got 60%. Great. I've got a $15,000 monthly benefit or a $10,000 monthly benefit. But at the end of the day, Uncle Sam's taking 30% off the top. So you really don't have 15,000, you have, 10,000 or 11,000 that's coming in. And so the individual or the private insurance companies sort of allow you to supplement that to fill that gap. And that's the entire intent of having an individual policy. So from a needs perspective, those are really the two biggest reasons why there would be a need. It's a shortfall in the group plan that person has. There are a lot of other reasons people will have them. For one, private policies are portable, group plans are not. So if you're happy with your current employer, great. In 2 years, you might not feel that way. And so you might want to have an individual policy that can go with you throughout your career, wherever you go. And it's not really tied to your employer, whereas the group plans are tied to an employer. So, portability, flexibility, I would say. And then secondly, of course, is the need, the fact that the group plans sometimes don't cover the full amount of that person's income that they want to have insured. And then the fourth
Okay.
thing I would say is quality of coverage. Group plans oftentimes are just not that great. Even the best of the best are not as good as private policies. The worst of the worst are kind of disturbingly, not great. um,
Okay.
they're not specific to a person's occupation. They basically say, after a certain amount of time, we're only going to continue to pay you if you are unable to do any occupation, which is obviously not very favorable for someone who's normally making their living in the OR or doing procedures or seeing patients. So we ideally would have better quality coverage for that person. But those are
Yeah,
really the
somebody
big
told.
four reasons.
Yeah, somebody said one time they can the own occupation if and I don't know how if it's you can be a doctor or you can be the orthopedic surgeon that you are, or the interventional cardiologist that you are. So if you can be a doctor, you can write Zithromax prescriptions in the urgent care for $85 an hour. But you know, with your left hand, but you can't do procedures, which means you may or may not qualify if you have a certain policy that says you can be a surgeon or you can be a doctor, or maybe like you said, you can do anything because you're not 100% disabled. So I think those probably nuances matter quite a bit when it comes to the physician and their specialty and their craft.
That's exactly right. Yeah, it matters. It matters when the person needs to go on claim, right? A lot of this stuff, sort of on the front end, is easy to validate. Oh, I'll go with the cheaper one. It's fine. It's not going to be an issue because none of us actually believe that we're going to become disabled. I mean, thankfully,
Yeah.
the statistics are still in our favor that we won't. But when it happens, all of a sudden that added verbiage, that enhanced verbiage is really very helpful.
Mhm.
And that's what could make or break whether you're getting paid, how much you're getting paid, and how long you're getting paid for.
Yeah.
So you're right; those nuances are the important ones.
Yeah. All right. Another question here on cost. So I've heard it's not cheap, but I don't know how much it costs. Is the cost a function of I want 10,000, 20,000, 50,000 a month in coverage, or is the cost a function of I'm a neurosurgeon or I'm a like for example, if you have two physicians, they're both making 500,000, one's a a hospitalist that's really working a lot of extra shifts, and one's a orthopedic surgeon that's just starting out. Do they have this? They make the same amount. They're getting the same policy limits, but they have different pedigrees, if you will, different trainings. Do
Sure.
they have the same policy because it's for 500 grand for whatever the percentage is, or is it different because of their craft, their specialty?
So the policy is the same. The policies are worded in a way in which they always apply to whatever the person is doing. That
Okay.
individual's material and substantial duties. So naturally, an orthopedic surgeon, if we're talking about their material and substantial duties, it's going to be different than that of a hospitalist or a nephrologist or a radiologist. But the policy is actually the same. It's just the way that it's worded that will naturally apply to that person's specialty. As far as pricing is actually impacted by several factors. So for one, gender, obviously, unfortunately, this is a lot more expensive for women. So, you have a female 30-year-old hospitalist and a male 30-year-old hospitalist in the same exact state buying the exact same policy parameters. The female's policy is probably going to be 40 or 50% more expensive, if not even a little bit more. Yeah, it's
Wow.
very notable, like very notable.
Wow.
And so, that's one big thing. The state in which you live is another big thing. California, for example, is the most expensive state to buy a disability insurance policy in. So if you're buying it in Oregon, no big deal. If you're buying it in California, it's going to end up being a decent amount more expensive. So the state that you live in can definitely impact it. And then it's
Do
assessing
you
the
have
risk.
do you have to buy in the state that you're working, or if I live in California, work in California, can I buy it from Kansas?
You cannot. So you have to buy
Okay.
it. For the most part, it's the resident state where you live. There are some companies that will allow you to do where you work if it's a state right next to where you live, or you're traveling someplace but you're traveling 5 days a week, 4 days a week, something like
Mhm.
that. But that's actually company specific. Not every company will allow you to do that. Some of them will specifically require that you buy it in the state that you live in specifically.
Okay.
So we kind of have to, but you can't pick and choose. You can't say, well, I live in California, I work in Oregon, and I'm buying a policy in Kansas. That doesn't really
Yeah.
work.
What so okay, so if the policies are state specific, how does a physician who does locums handle a disability policy? Because they may have an assignment in one state for 6 weeks and an assignment in a different state another couple of weeks, or like a traveling emergency medicine physician, or even a traveling nurse. They kind of pick up shifts wherever there's shifts available. Sometimes
Yeah.
it's for one of these larger organizations. They have what they call traveling physicians or rovers. They kind of fill in, or it could just with the same company, or they could just be taking different gigs through a locums agency. How would they cover themselves for disability insurance if they're working in multiple different states throughout the year?
Yeah. So it's a great question. Again, one of the things that dictates which state you're in when you're buying it is physically which state you're in when you're signing the application. And a lot of this is big picture, right? So if you live in Texas, and you occasionally travel to other states for locums, work, or, you live in Michigan, you go to Texas, 6 days, 7 days on, 5 days on, 5 days off, that type of schedule. If the company will allow you to, you can pick either one. If they don't, then it's going to be based on where you live. So you live in Michigan or you live in Texas, wherever it is, that's what it's going to be based off of. Now, for somebody who's working on assignments, they're normally in Texas, but they're, in South Carolina for the next 6 months. If they're buying the policy while they're in South Carolina, you would do South Carolina. That's where they're actually residing at the time that you're applying for the coverage. That's where they're physically going to be when they're signing the application. If they're going to be there for a solid 6 months, that's what you would do. But again, if they're living in Texas and they're traveling, you can kind of go either way.
And now, when someone has, so I have a life insurance policy for a set number of years. If a disability policy, I'm guessing you buy it and you pay it every single month or every single year in perpetuity until you need it. When should you cancel the policy? What happens if you miss a payment? Can you just repay the next month? If you cancel it, can you get it back? Walk me through like how the policies remain with you over time, forever and ever, or how they change if you decide to cancel and then re-sign.
Of course. So disability insurance is the type of insurance that you pay for and you keep as long as you want it. You're not obligated to keep it for any period of time. So if you sign a policy, you don't have to keep it for a year or 5 years or 10 years or anything like that. The time frame promise is more from the insurance company to you, basically saying, look, as long as you continue to pay this timely, we'll continue to insure you under the same price, the same terms, all the way until age 65. That's usually when the guarantee runs out, which is okay because by that point, most people shouldn't really need their disability insurance anymore, right? Hopefully a little bit before that, they can get rid of it. So it's renewable on a yearly basis, assuming that you pay it on time, great, no problems. If you don't, if you're a little bit late, policies include what's called a grace period. So kind of like a period of time where you could be late, but it doesn't impact your coverage. Your coverage is still effective. And that's usually 30 or 31 days. If you exceed that, there's usually another 30-day forgiveness where you can still reinstate the policy just by paying. After the first 30 or 31 days, the coverage is no longer active. If something happens at that point, you're not actually going to be covered, whereas for the first 30 or 31 days, you are. And then once you've exceeded 60 days, basically past the due date, now that policy needs to be reinstated. The insurance company can ask you for more information, updated medical information, updated financials. You really want to avoid that one because that's where all of a sudden, everything could change. The policy terms could change, all of that stuff. But as long as you're paying it within that time frame, you're good. And you can just kind of pay it and you get it for another year. Or if you're paying it monthly, every month you continue to pay. As long as you're paying, you have the coverage. That's essentially the way that it works.
Okay. So if the premium cost is kind of static over time, so as long as you don't miss a payment, does that mean that buying it when you're younger and healthier, I'm assuming, makes the most sense?
Yeah, generally speaking. Healthier is always great, of course. Younger, the premium is going to be a little bit lower. Part of the pricing of disability insurance and term insurance, the same, is based on age. So the younger you are, the better it's going to be, the lower the premium is. Sometimes people will start policies without going too much into the weeds on what's called a graded premium. So instead of locking into a level premium right from the beginning, you start with a much lower premium, but it's graded. It continues to increase each year. And at some point, the strategy is you start with this maybe during residency, just to keep the cost as low as possible. And then you switch over to a level premium at a later age. So I've got a PGY2 who's got 4 years left of training still between residency and fellowship. For the next 4 years, we want to keep that premium as low as possible. We'll do graded, and then we switch over to a level premium at that point. So from that point forward is where you're locked into that level premium. But initially, it wouldn't be. But for the most part, yeah, a lot of people do buy their policies on a level premium basis right from the start. And so the younger you are, the less expensive state that you're in at that time, the better. You try to tie it all together, right? Do it during residency so you can get discounts that you as an attending may not be entitled to or be able to get quite as easily. Do it when you're younger because now it's a younger age pricing that's locked in. Do it in Michigan before you move to California because now you've got Michigan pricing instead of California pricing. It's not going to change after you move. You want to try to tag team it all.
If you said there was one common mistake that physicians make when it comes to disability insurance, take aside buying it or not buying it. What's the most common mistake? They wait too long. They buy the wrong policy. They don't think they need it at the right time. They sign up. I mean, walk me through what the biggest mistake for physicians purchasing disability insurance. What you feel that is.
The interesting thing is that that question, or the answer to that question, has kind of changed over time. Like right
Right.
now, we're chatting in November of 2024. And one of the biggest things in the disability insurance marketplace is the introduction of what's called guaranteed standard issue offerings, GSI for short. And so this is an opportunity where residents and fellows at certain GME programs can get coverage without having to share any medical information. That's a really big deal, right? I mean,
Yeah. Yeah.
if you've ever gone through talk therapy, if you've ever been on an anti-anxiety, antidepressant medication, if you have, psoriasis, if you've ever had a neck cramp, a low back cramp, anything like that, when you're normally applying for coverage, the insurance companies will exclude pre-existing conditions. So it's not really a question of like, do you have any chronic illness? It's, do you have any pre-existing conditions? Because if you do, chances are the insurance company is going to want to exclude those. And so, anyway, with these GSI programs, you can completely avoid all of that and get a policy without exclusions for pre existing conditions pretty easily. But the caveat to it is you cannot have already applied with a different company prior to applying to that GSI program. If you do, then that company who's offering the GSI is not going to want to offer it to you. In other words, if you've already gone to company Y and been told that you don't qualify for coverage or that you're going to qualify with some restrictions, company Z who offers the GSI program is not going to want to offer that to you. So that's one of the biggest mistakes we're seeing today is that if you don't know about that GSI program and you don't go for that GSI program first and you go someplace else, that could hinder your ability to get access to that GSI program.
Mhm.
And so these GSI programs are kind of interesting. A lot of agents and brokers out there can offer it, but not everybody can, and not everybody wants to. Let's just say there might be some financial conflicts of interest. Maybe they're not going to make as high of a commission or something like that. And so there's this conflict where they might not even tell you about it, and they might know about it. They might know that they should at least look
Mhm.
for it, but yet they're not telling you about it. They lead you down the path of applying medically through a medically underwritten program, and now all of a sudden you lost access to that GSI. So honestly, that's one of the biggest mistakes we're seeing now. People will reach out, tell us that they applied, they had these issues, and we're kind of going, "There's a GSI program there. You could have had this easy peasy.
Mhm.
You wouldn't have even had to disclose
Yeah.
any medical information, and yet now that's it. They can't get it anymore." So for any resident or fellow who's watching this and thinking about this, there might not be a GSI program at your GME. And the GME program might not even know about it. A lot of these, it's kind of interesting. They're being offered directly by the insurance company to the residents and fellows. So, HR is not going to know about it. The GME is not going to know about it. It's just there.
Mhm.
And you want to try to find access to it, right? But you at least need to question it. If the broker that you're talking to isn't telling you about it, you kind of want to say, well, is there a GSI program? Just ask the question. And if
So that's
you're
something, yeah. So that's something that they would ask. They would ask the person that they're consulting or buying it from is, do they have a GSI program? And that individual should know yes or no, and then share that with the
absolutely.
physician. Okay.
Yeah.
So
If they're in the
can I
business
buy?
of working with physicians, they'll know. If,
Okay.
for the most part, I mean, if somebody is, I don't know, talks to 5 physicians a year, they don't know. They're not going to have that
Right. Right.
information. They're not going to be as readily available. But someone who's in it, they should have the answer to that. They should know if there's a GSI program there.
So another question I have based on that: do if I mean, I don't know who all can sell disability insurance. I don't have a license. I don't know much about it. If somebody asked me to buy something, I would say I don't know. But I know, like with life insurance, I can just go online and I can just apply for it online, and say I want a 20-year term or a 30-year term. Here's my stats. Maybe I need to do a physical or some blood work. At least back when I bought mine, it was pretty smooth and simple. I didn't have to call an expert on life insurance. Do people need to go through a broker? Can they buy it themselves online and save money? And if they do have to use a broker, then would they select a broker outside of somebody who knows the nuances between physicians and non-physicians?
Um, so even with life insurance, believe it or not, you can go online and buy it, but you're actually buying it from a licensed insurance agent. At this point, insurance is state regulated. in order to buy insurance or for somebody to sell you insurance, that individual has to be licensed in that state to conduct that line of business or to sell that line of insurance, essentially. So can you go online? Sure, of course. I mean, there are a lot of brokers and agents out there that are marketing online at this point. If you're not online, are you even really in business? Everybody is looking online for stuff, but it's not going to change anything. It's not going to make it any cheaper. That actually hits on a really great question. So disability insurance the pricing for disability insurance, I should say, is determined by the insurance company. So if you're talking to broker A and broker B, and they're showing you the exact same policy, the price will be identical, like to the same penny. There will be absolutely no difference. If there is a difference, it's because something has changed. Either one person is including a discount that the other one is not, one person is including certain features or riders that the other one is not. Somehow that policy is designed a little bit differently, because if they truly were the same, the premium would line up perfectly. So yeah, that's a really interesting thing. So, looking online.
So
Go ahead.
no, I was gonna say, so like a broker who moves more volume doesn't get preferred rates. The rate's the rate. It's not like, U.S. bank gets better mortgage rates than maybe a little local bank because they've got easier access to money. It's the rates are the rates set by the insurance companies, and there's doesn't matter how many policies you move in a year, your price is the same from them. There's no bulk discounts, if you will.
That's right. Yeah. The key, to where that might not be, that is 100% factually true, but where you might find these, cases where you're not seeing that is just more so working with someone who's experienced versus someone who's not. So someone who knows the disability insurance marketplace specifically for physicians knows exactly where the discounts are, how many discounts, what amount of discount is available. There are some companies where, depending on the GME program that you're affiliated with, the discount amount might be different. Someone who's in this day in, day out and fully understands the business is going to know, or have charts that they can look at, right? I mean, I don't memorize all this stuff, although a lot of it does come pretty easily at this point. But we do have lists that we can reference and cross-reference. And so that person should know. Whereas again, someone who's completely out of their comfort zone, sells 5 policies a year, barely ever talks to a doc, they don't know that. They don't even know to look for that discount. They don't even know that every company offers it and in which circumstances. And so that's really where I think there's going to be a difference. You might find 2 agents, 2 brokers who are showing you 2 different things or 2 different prices. And one of them might just be that person didn't look for the discount, whereas the other one knew to look for the discount and included it. So that's where you might find some price discrepancy. If they're both doing the full job and getting the discounts, the price will be the same though.
Yeah.